Good evening. Hi, this is Interchain Live. I'm Ryan Munn. We are talking about crypto, blockchain, the future of technology here. I'm in Vermont as usual. We've got guests from all over the place tonight. I didn't actually catch where everybody's from, but I know we've got John is in Philadelphia with the Blockchain Braintrust. And then we've got Brendan in from Brendan. You're from Dallas or Austin?
Austin, Texas.
Austin, Texas. Austin, Texas. And Bren's been on before. We're going to get a quick update on his research into the Bitcoin price phenomenon. And who else do we have on here? Jonathan and
Eric.
Eric, how's it going, Eric?
Good, man. Yourself?
Good, good. Jonathan, we've got muted because there was a bunch of noise. But actually, you know what? Let's just double check if. Yeah, cool. He can unmute if he wants to when there's less noise. And Eric, where are you calling in from?
I'm calling in from Horsham, Pennsylvania, so right outside of Philadelphia.
Awesome. Right on, right on. Well, thanks for joining us. So yeah, John, Blockchain Braintrust, and I have connected somewhat recently, but I guess we're all kind of in recent connections in crypto here. But we were just talking search engines and tools and utilities that are rewarding people with tokens. So I don't know if, John, you want to kind of pick that back up, but we were just kind of getting into that a little bit.
Well, you had showed me a page that said Presearch on it, and then you started searching for terms, which pulled up apparently, Google search results. But every time you did so, I saw little Presearch tokens going into your wallet there. I looked it up on CoinMarketCap. It's like about, roughly 20 cents per token right now. So, that's not too bad. I mean, even two of those tokens per, it's like, nearly $50 almost for,
Yeah, kind of a neat little thing. So yeah, so you're looking at CoinMarketCap, there's Presearch, and then here's the Presearch page. So I have this set as my home page, so it's just easy. You can select and customize some of the different search tools that you're using. So if I wanted to search Facebook, I could search Facebook actually and go Interchain Live and see what pops up. See if I pop up. Oh, look at that. Oh, it's going right to my account. Well, that's no fair. But anyways, yeah, there we are.
Delicious tokens.
Yeah. So yeah. And Brendan, you mentioned that there was something similar you'd come across.
Yeah, I forgot what the name of the site was, but I believe you're able to purchase like a search result or a search URL of some sort, and the more people that search for that, whatever you search for, the more that you get paid out. I believe it's just like SEO, but instead of and it only worked with that one search engine, and it really didn't even pull up that very good of results. But
Gotcha.
It's kind of a cool little idea.
Yeah, it's a use case, little experiment.
No,
Yeah.
I mean, that's kind of the beauty of this whole industry, right? Is that it's a ton of experiments, but it's half the solutions.
What was the thing you were showing me the other day where you would respond to queries and you got paid in Bitcoin, right? I think it was Bitcoin.
Yeah. Earn.com. In fact, I just read a rumor somewhere about Coinbase. I guess Earn.com is entertaining offers, and I think Coinbase is one of the potential offers I saw there. So yeah, Earn.com. And I can send you guys a link to this. In fact, why don't I do that? I should probably post the link in the chat down at the end of this. But I just used Facebook to log in, I think.
No, I didn't get to fully peruse it, but from my cursory glance, it basically seemed like that you were fielding queries from people that would just sort of send out, generic.
Hey, you know what? Hey, look at this. They're gonna love this. All right, so here's my link. There we go. Let's just tweet that right now, at least. And here is a message. What do I got? Let's see. So, Tune Token, a decentralized music production marketplace. Get your free Tune tokens now. Music collaboration, decentralized. Oh, this is cool. Right? So, some information, some links. I can come back to this later if I want. I'm going to hit start. And here's the thing. I'm on my laptop right now. So I'm going to actually jump to my phone so you're not going to see this part. But essentially, it's going to send me to the Telegram community, and then it's going to ask me to put in my Telegram handle.
Yep.
And from there, it'll reward me a little bit of Bitcoin. So I'm going to do this real quick on my phone on the side here. There we go. Where's that down? And now this is $1. It's kind of a lot of work for $1, but you know, when Bitcoin goes another 10x, I guess it'll be $10, right? So I'm making $10 for about 5 minutes here.
Especially if you hodl, bro. Gotta hodl.
That's right. Gotta hodl. All right. So earn.com.
Speaking of like Bitcoin, I guess, and prices fluctuating, we can use that to segue into, Brendan.
Yeah.
Oh yeah.
Absolutely. Yeah. Let me jump back.
Yes.
Brendan, if you want to, you could share your screen too.
Right. Which let me see. How do I do that?
In the top left, if you float your cursor there, is a little green. Yeah, there you go. And
Okay, share that. Can you guys see? Can y'all see it?
Yep. It's catching up to you.
Yeah.
There.
What?
Oh, it's.
It's like I see it and then I don't see it.
Well, I think I might have to keep on talking and then it works, right?
There it is. Okay.
Are y'all able to like see it now? Like it's okay.
Yeah,
Sweet.
Should be.
Okay.
It's coming up now. There it is.
Oh, there we go.
Now we get some charts. Right on.
Yeah, we have a lot of charts. I've done a lot of research, honestly. And now I'm actually able to tell y'all that there is anyways, so let me just start back from the beginning here. Let me go back all the way to Bitcoin, and here we are. So there's difficulty, have saturate, and on the price, on a log scale real quick. Alrighty, so y'all seen this before, but essentially every single time that the lower dotted line, which represents the price, and the little fuzzy top line, which represents the network hash rate, every single time the price exceeds it, miners are getting overpaid. And whenever the price is too low, the gap, meaning that there's a huge gap, miners are getting undercompensated. And and basically, whenever miners are getting overpaid for the work they're doing, the market is completely overpriced. We can zoom in over here, and we can see that this was the $20,000, 19 point something thousand dollar Bitcoin, and the whole entire time the price was above the total network hash rate. And turns out this applies to a lot of other coins. You can look on other coins that have miners, and the same rule applies. If you look at areas where the price exceeded the network hash rate, these are times that basically the cryptocurrency is overvalued, and the miners are actually getting overpaid for the work that they're doing. And my assumption is that there exists a nice fine distance between the price and network hash rate, that miners get a fair compensation for the work that they're doing. And if I can give you a fair return, I can give you a fair price of Bitcoin.
Right.
Any questions for now?
No. I mean,
yeah.
Right.
Right on.
So then I did that. So I found basically this is data going back from the very start of the 1st of 2017. So keep in mind, this is all like after the fact data, but it's still very helpful. If you were to essentially grab from the 1st of 2017 up until like 9 days ago, it's about like 400 and something days worth of data, and go ahead and give you, I guess, the average distance between those two lines, and then essentially just give out a price for what the fair price should have been, where miners were getting compensated fair return every single day. Well, you would get this purple line right here, and right now it's around $12,381. And if you do the same thing for hash rate, because difficulty only changes every about 10 to 14 days, well, hash rate changes all the time. So that's kind of like a newer, more updated network, but it's very choppy. Well, if you base the price based off of hash rate, and then getting a fair return, it's pretty jumpy. But right now, it should have been at around $11,102, and this is 9 days ago. If you guys want the most updated what's it called, charts and metrics, I believe I have that right here in this other folder. But I will say during this time, what you're able to do actually, even if you see this big rise right here where you saw the huge market rally and stuff like that, if you were to pull data back from this point on and behind and get the distance from there, I mean, you'll see like this was all the market. Like this whole entire time, it shouldn't have been up that high at all. And if you would have given it a fair return and a nice little distance, you would have gotten much smaller desserts. I think back when it was the highest, it should have been at $6.6 thousand to around $5,000 back when it was at 20K. There's no such reason why it should have been up there, and that was just a market doing its thing, which is very unpredictable, and that's more like humans doing that. But for now, for today's price, and this is only going back about 1 month, look back period of distance and data. We should be looking about an $8,882 Bitcoin, and that's basically what's fair, only for data that I pulled a month ago. This isn't overall data, and pricing models are only as good as the data that you feed it. So as of 1 month, basically from today and 30 days ago, I can comfortably say that about $8.8 thousand is about the fair amount of Bitcoin where it should be. But if you feed it back, a couple years back, then that number is going to be different, and it should be a little bit higher.
But so it's still floating. Like, I mean, it's getting some hard resistance, not hard, but semi-hard resistance around like 8,000 right now. You know what I mean? Because once it crossed down off of that, it's been floating below 8 for maybe the past day or so, right?
Yeah, no, it really has. And see, this little red line shows you the fixed, I guess, the average distance. So I got that average distance and I set it equal to it's like this 8.44. It's a weird number, but anything below this red line means that the market is a little overpriced. And over here is when we saw that $20,000 Bitcoin. But anything above this line shows that miners are getting unfair. Like the market's going into a downward trend. Miners are not getting compensated fairly, which is basically a downward trend. And the price isn't moving as fast to compensate for all the extra miners coming onto the network. And this is where we are over here. We're in the above the red line. Right. That's just kind of what happens. I think
some people are giving some TA saying that, based on similar data that they've been pulling, that we should be seeing like another bull run around like May or, June. I mean, how do you feel about that?
I think that's I think that's pretty optimistic. I think there's a lot of good projects meeting their milestones and a lot of new infrastructure that's going to be coming to fruition here in about the summertime. And I've seen a few articles pass my eyes that indicate that the summer is going to be very positive, very good. But yeah, I think the summer is going to be good. I've always kind of been thinking that myself.
I feel like it will too. You know what I mean? Especially because the tree has been shaken so many times. Like, even the most hardcore hodlers have basically been shaken out. Only people that purchased like Bitcoin on or before of like, October maybe, or September of 2017 would even be in, the running to, want to hold their coins, right? Everyone else has probably just been like, fuck it, this shit is fake and sold, So,
well, I feel like I did pull some more data, and I found that through the years of the first day of 2015 and to the first day of 2017, that distance right there, if anything that's below this line right here, anything below the red line means that we're, in a good day, it's miners are getting paid fairly. The market's pretty much up at this point. But it's a nice little complete shift you see in time right here, where it just stays above this red line. And it doesn't want to go further. Nice little S curve. And
I like it.
That was from 15 to 17.
Yes, this is starting from the first day of 2015, and then ending at the first day of 2017. And then the previous charts were starting at the first day of 2017 and up until 9 days ago.
Gotcha.
And,
that's, I mean, pretty interesting, just from the fact of the popularity of coin increasing fairly exponentially over that period.
yeah, and it went from about right here is the red. If you can kind of see the red on all this noise right here. If you were to base the fair price based off of hash rate, which hash rate changes because, I mean, if the internet goes out on a mining farm, the network thinks that they're all offline, even though they're probably all online. So internet outages, that can all affect hash rate and stuff like that, even though hash rate's more of a calculated value. But it's very choppy, but for the most part, this blue fuzzy line is basically where the price should have been when you had but the actual price was a little bit lower than that. So it wasn't really compensating miners. And you see this crossover right here. This crossover is exactly what you see with this crossover. So when the price, when it's above the red line, miners are not getting compensated. When it's below the line, miners are. And that's exactly what you see right here. Right around this cross point right here, you see the hash rate explode further. And this was because the price should have been higher during this period in time. But anyways, I do have some other data I can show y'all.
I'm down. Whatever you want to show. Also, did you get that text message I just sent you? Is there any way you can just share that on the screen real quick? Because that's a really good snippet of basically the exact pattern that the Bitcoin itself has been following. If you look at the year trend and the month to month on that year trend.
Text message.
Yeah, check your text. I sent it to Ryan also.
Did you send it to me? Yeah, hang on a second. I can pull it up real quick.
Okay, let's see. Oh yeah, I remember this one. This was the seasonality effect.
Yep.
Right. This what I did was I plotted this, I believe, the grain fair price rolling average. Anyways, I don't know if you can see this really shallow line, but this red line.
Let me switch you back.
This
there you go.
For the same dates that I'm talking about, it's starting the first day of 2015 and ending at the first day of 2017. And this red line that you see right here, this very chattery red line, it's based off a hash rate, so it's very choppy. But what I did was I wanted to see how far off each day was. So my theoretical fair price for Bitcoin based off the hash rate, in this point says it's 47% off from the real price. But what I want to show you is, if I zoom out, oh, whoa, this is real thin, real tiny. Oh. Way down here. Okay, yeah, come on. No. Don't lag. Let's go.
Don't you lag on me.
Yeah. It's a lot of data to process.
I know, right?
Yeah, it's like 800 plus points and stuff like that. But you guys know that crossover chart. Well, the crossover actually, it's coming here again. You see this red area stays on top, and then the more closer it is to zero, which is, this line right here, that's really kind of hard to see. I don't know how good the resolution is, but the closer it is to zero means that all the computations that I'm doing, all these synthetic prices fair prices that I'm computing, means it's literally on point. And it's funny because it goes up, it stays up, meaning I'm usually in the positive area, but just still off, and then it goes right back down and it stays negative. It's really weird. And that has to do with some of the other charts I showed you, that a little shift, and it happened in the exact same time. So I thought that was pretty interesting. So I was really getting the numbers right for a short period of time, and then for some weird reason I stayed consistently wrong but negative. I mean, I'm only wrong about, you know.
Well, yeah, but what I mean is that, like, okay, for example, have you overlined that data with the data when? Because remember that snippet that you sent me from the congressional hearing when Giancarlo is like talking, basically substantiating what you were talking about. You know what I mean? Like, I saved that video. I love that video. But he says that 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 it was in correlation, then it went out of correlation, and then it came back into correlation, right? And it's like if you could, on a probabilistic scale, pattern those decorrelations, right? There might be something to that, right? You might be able to trace the exact market reference of what is occurring to create that deviation, and then you can just figure out exactly what it is. It'll no longer go out of correlation. You'll actually be able to compensate for that. You know what I mean?
Right.
Like,
yeah. And I definitely think you're onto something on that. And when I first saw it, I didn't know how to make sense of it. I was like, whoa, why am I know I'm supposed to be off because, that's just how the numbers work, honestly. But I didn't know that it would be in such a weird pattern like this. So overall, and I will give you one last little cool little thing I've discovered recently. So I decided to turn this into a trading strategy. So essentially, why not capitalize on this and see whether or not you can use this as an indicator to know when miners are getting overpaid and are underpaid. And I came to the conclusion, and I don't know why I didn't come up with this earlier, but when miners are getting overpaid, well, the market's good. The market has to be in a good position for that to happen, or the never cash rate or the difficulty adjusted, and the market, could go a little bit down. So what I did was, every single time that the market return, let's see, right about here. So I have three different strategies. One strategy down here basically means if you were to just throw $1 in there, and I really do need to make sure all this is on point. I think it is, but again, this is really new.
It's totally cool, man. Don't worry about it.
Anyways, if you just throw $1 in there, and you at the start of 2017 and coming in today, you would have you'll be up by 262%.
Yeah.
And then my strategy basically has it to where it's 323%. So I am beating the market. And then this one right here shows it's just the opposite of what I'm doing. So I basically thought, like, well, what if I just have someone next to me who just does the opposite of what I do? So of course he's negative. And then the best case scenario, if you somehow got every single positive movement within this day-by-day data that I have, then the maximum you could ever get is 826%. And this value is this 323% is based off of data that I got the prior day. So this can work. And I'll show you over here the results. And what I really like about this...
I'm sorry, can you clarify something?
Yeah.
Your percentage of returns you're referring to are returns on your $1 US or your $1 worth of Bitcoin?
$1 US.
Okay.
So
yeah, sorry. Can you extrapolate as to what those returns are relative to buy and hold?
So, wait, say that again. Buy and gold.
Buy and hold.
Oh, buy and hold.
Like,
so
just buy and hold $1 worth of Bitcoin at the beginning of the year versus what your
So on the day, on the first day of 2017, all the way up to 9 days ago, if you were to have $1, theoretically $1 times, one times 260%. Oh, I need to go. I don't know. You're not about to have $3, but yeah, that's why I need to make sure my market returns are correct for the most part. But
okay,
it says you should get about, I'm thinking $26. Anyways, if you were to do it, all I did was I summed up the market returns right here. This is day by day, and if you sum it all together, all the negatives weigh out the positives, and you should have something at the end. So that's why I do need to double check it to make sure it took us 262% at the end of that time frame that I'm talking about. Seems a little low. I thought it'd be in the thousands.
Yeah, I was gonna say, yeah, that's why I was checking that, because that seemed like maybe like compared to Bitcoin, or like the Bitcoin difference.
Yeah, so I feel like, I mean, I looked over it.
With a Bitcoin, and that's what or it's 1 Bitcoin, and you got that return by trading.
Yeah, no, this is just purely just if you have the dollar, and this is what it was. I just went ahead and add up. I just did the sum formula on the daily returns, so the net change every single day, and then for 480 and for 448 days worth of data, and summed it together, and then you got some positive days and some negative days, and the net's out to 262.
Yeah.
But the best days, if you just get all the positive ones, is 826. So I don't know. It's kind of odd. It's kind of low to me, honestly, and it's still
because you're not. I think you're missing you would be compounding, right? Because if you have a positive return on your dollar and then you're reinvesting that, you're going to compound the return.
Right, and I think that's when it comes down to geometric returns and not using a sum formula. But
okay,
yeah.
Well, I mean, still though, you're definitely on the right path. And
yeah,
is there any way that you can zoom in on that graphic that you have over there, Ryan? That sent to you?
Yeah. Let me pop in there.
The seasonality, because this is ultimately,
as zoomed as I can
the
get.
Projections that we were discussing and that these other people were discussing are true. Even relationship to the seasonality, you can see that like we've had a similar dip happening at the same time of year, 2016, 2017, right? And then same pattern right now.
And strangely enough, although I'm pretty sure my market return might be a little off, it still models exactly what happened. Like the price structure in this blue line looks exactly like how the Bitcoin price changes look like on any other chart.
Right.
And essentially, my little pricing bot does really, really well in a bear market. It doesn't want to lose money, and I think that has to do with the same thing as saying in a bear market, nothing is really fair right now. Miners are not getting compensated barely, so you should hold off. But there's some days that they are, and when that does, it seeks to tell you that that's a buy signal, and it gets those for some weird reason. It does, and that's so far so close of what I got it to so far. So it's all kind of.
I definitely need to hook you up also with the one of the West Coast members of the Braintrust, because he's building a trading bot basically right now for us using Python, and he's like using Coinbase and API. Wrapper and Binance API wrapper, and
I research based off of that.
But the thing is, you have so much of this data that he needs, and also you're collecting data through other sources that he would love to have access to just for scraping. So I got to set up a phone meeting with all of us, because that would be really beneficial to getting this trading bot working, because we're trying to just have this working in the background, trading our crypto, so we can just be making money off of it, and then like focusing on other projects and things.
Right.
And so, speaking of other project things, I think Skino, are you in a position where you can speak yet, or what's going on?
Hello. Yes, I am. I just got home.
Okay. All right. So,
before we change gears, real quick, I just wanted to point this out. This was one of the guys, one of the things that we saw at that conference, and I was just curious, Brendan, have you looked at this Haas online?
Hold on.
Oh, sorry. On the
Haas is the German word for rabbit, and that's why the rabbit is their logo, I believe.
Right on. Anyways, I told a buddy of mine about this, and he has signed up for it and loves it so far.
I wanted to look into that.
It's just a trading bot, right?
It's a platform for trading bots.
Oh, okay.
So like you can run and you can run you can back test your algorithm.
For real? Oh, that's amazing, dude. All right, I got to send that to this guy.
Okay, and just so you know, while you're at it, cryptotrader.org.
Yeah.
This is another one which I actually have used a little bit and playing with. I get email updates from a bot that I run in a pseudo that's not actually trading.
Okay, yeah. I mean, anyone from the Braintrust that has any and all info about, what we should be feeding to a bot for trading purposes, like, yeah, give it to me. I'll send it out to Nathan because he's out there,
Yeah, this has
when he's not building flying cars for Larry Page. He's fucking working on our shit.
Right on. All right, so sorry to divert there, but
no,
let's
not at
get
all.
back
Absolutely.
to go ahead, Jonathan.
Yes, you back online now? That's good.
Yeah, I am back online. I'll just introduce myself real quick. John Skino from Ewing, New Jersey. And I work in RFID.
Awesome.
So, that's about me.
Yeah. And
you say you work in what?
RFID. Radio.
Oh, awesome. RFID, yes.
And then Eric, you never introduced yourself as far as what you work in,
Oh, right.
Properly, yeah. I work in life insurance as my primary field, but I've just been kind of entertained by the idea of the cryptocurrencies over the recent years, and was just trying to look at other applications to apply it to.
Yeah, I mean, I just sort of sprung the Braintrust on Eric today. He had no idea what was going on. I mean, I've known this guy for years actually, but I just didn't get around to discussing this with him. But because I got this upcoming meeting with these bitclaims guys, and he works in insurance, he has for years. I really wanted his specific input, from an insurance standpoint regarding just the viability of this as a model, and the potential pitfalls regarding its adaptation, and evolution within this constantly changing market that I mean, right now we're in the midst of a possible socialized medicine implementation in America. And I mean, I think a majority of this is already predicated on a private insurance model of some sort, but then at the same time not, because it removes the necessity for an insurance company. So it's really vast. I want help unpacking this, and I want to try and present something cohesive to these guys when I meet them on Friday. So, any and all input from any of you guys is more than welcome. Take it away, whomever.
Awesome. Well, hey, let me do this. It's bitclaims.io, right?
That is correct.
Bitclaims.io.
I can use a little.
Let's search for it first, just for fun. Oh, and I already had it up there. All right. So, architecting a new environment of incentives for patients and providers. All right. So, since we're actually doing this, let's. I'm curious. Are you guys familiar with Patientory? Oh, what happened there? Apparently, they're not familiar with themselves.
Because that was one of the things on my list, was I wanted to find what their competition was, because they have an interesting model. So it's not exactly medical chain. You know what I mean? It's a little different. So.
Charts. Oh, come on, charts. Chart. There we go.
So I'll throw this out there.
Go for it.
So I haven't really had a chance to go through the bitclaims. I just got home. It's been a crazy busy day.
Yeah.
One other thing that I want to throw out there is one thing we're doing with RFID, which could link into what they're doing with the bitclaims, I think. So we use active RFID for real-time location. So it tells you exactly where a patient is and where the doctor is within about a foot. So we link into their billing systems. And when the doctor is in the patient's room, it actually tracks the exact amount of time the doctor was there. It's not only for the billing, it's also for insurance, for if something happened to the patient, to prove that, okay, there was, this many nurses that visited him for this amount of time, the doctors were there this long. So I don't know if that's a avenue onto what these guys are trying to do.
Well, that might be related to what I just pulled up. This is one I just came across not long ago. Proof of location. Looks like, so, all right, so let's go back. BitClaims. So BitClaims appears to be trying to create a decentralized marketplace, creating a buyer's consortium, essentially, establishing a pool portfolio, and looks like grading, essentially. And then a market to be able to request those services. And then they're talking about execution of payment adjudication, which essentially is setting up the smart contracts to handle the payments and the adjustments to the claims. This is definitely a real problem. I know there's a startup in Vermont right now that's in this space of basically automating various aspects of claims processing, which is a huge barrier. Funny enough, they seem to think that blockchain's too far down the road for him to worry about, but that's an unfortunate short-sightedness that we'll run into a lot. The first thing that I noticed on this, though, is that they're looking at using Bitcoin Cash as the payment mechanism, which just seems highly constraining. If they're going to have it set up to use Bitcoin Cash, why wouldn't they set it up to use any Bitcoin-based protocol coin?
Yeah, payment agnostic. If not blockchain agnostic, but we'll get to that in a second, okay? But the thing's staring everyone in the face. I can't show this to anyone without them being like, Bitcoin Cash? Like, it's like the first thing that just like, for everyone, it's like first thing in the door, right? Why did you pick that? Why that one? You know what I mean? Why?
Right.
Why Bitcoin Cash? And so
to try to create value. Well, that's what it tells me. So it tells me that this is really a ploy to create value for Bitcoin Cash because the reality is that the theory of token economics is create a closed value circuit with your proprietary token that functions within your system. You make your system proprietary, but it's friendly with all the other systems around, and your token competes in a marketplace of tokens. And if there's any kind of reserve currency like Bitcoin or whatever people are using to purchase your token, that's what establishes a market. But interlinking it with this currency, linking it with Bitcoin Cash, or even trying to link it with Bitcoin seems kind of silly, because why would you link your insurance claims processing to a deflationary currency?
Or even something that's in flux at all, right?
Yeah, right, exactly. You want to have it in some kind of a closed loop system that has some arbitration control over its token in order to provide, a real, managed value circuit, right? The goal is to provide medical services and, get services to consumers and patients as needed, best as possible. I don't see a need for some type of a currency per se in that equation, the way they've incorporated Bitcoin Cash.
I mean, you in theory could do this on, like the Neo blockchain or something like that, or Ethereum blockchain, and you wouldn't even necessarily have to tokenize it. You know what I mean? You would just have it, set for the smart the amount of gas needed for the smart contract, I guess, would be built into it, right? And then it would just
Well, now the funny thing is, you could say, hey, take this model and you could just white label Bitcoin Cash for XYZ coin, and you could market BitClaims for XYZ coin to every coin loving hodling community out there. So we got one for Bitcoin Cash, we got one for Bitcoin. We need a Litecoin BitClaims, and we need a so it's kind of a funny thing. How many solutions do we need for one problem?
Well, and I think you hit the nail right on the head there, Ryan, with just the ability to bolster Bitcoin Cash as opposed to coming up with their own independent currency, because the co-op that they're describing is already in practice in private insurance today.
Right.
So that was kind of my objection to, or one of my hesitancies to John, is how do you control price of a service in an ever-changing environment versus to just pegging it to yourself?
Right, right. Well, it's interesting you say that because so I was actually spending some time in the State House today in Vermont, and we are working on this bill for blockchain entities. But a big piece of the conversation came into it because Vermont's a leader in captive insurance. And so we're looking at initially just using blockchain for some document records and things like that. But ultimately, the conversations that we're having behind doors are more about how do we implement smart contracts that can provide or fulfill the legal requirements and expectations of a captive insurance company without actually being a company. It can be this decentralized layer, service layer that acts as a resource or tool to companies or even insurance companies in the state to reinsure their products and services. And they're even working on actuarial tables for errors and omissions coverage on the code for these implementations. So that brings to the question, right? They're not talking currency at all. We're just talking contracts. Like we don't need to have a coin in there. We have a currency. Granted, it may or may not have great value a year from now. And I'm not talking about Bitcoin. I don't know if anybody noticed those yen oil contracts go through. That's exciting.
Yeah, that was crazy.
So, we can have these insurance contracts that are written great, our currency crashes, but the mechanism in place, and we can use whatever currency makes sense at the time. And we can design in intrinsic tokens that can have some kind of an elastic control structure that helps to protect from volatility in a medical service system like that. So I've been watching Patientoid for a while. This is kind of interesting. These guys are talking about health records information in real time.
Sure. I mean, that's the big one that people are using blockchain for.
Right.
Have you seen medical chain?
Is it MedChain?
No,
is
medical chain.
Medical chain. Okay.
I don't know. Actually, let me correct myself.
Oh,
I don't know.
MetaBlock is another one.
Yeah, exactly, dude. I mean, the market is so saturated, but the medical chain, their ICO sold out in I think not even 5 minutes. It's like 200 million. So MetaBlock, is that you? I don't know that one.
Yeah. So MetaBlock is there.
Can you pre-search medical chain?
Yeah, absolutely. There we go.
See, yeah. So this is the same. I mean, and this is the real, the most tangible, nearest,
absolutely,
nearest trajectory of blockchain and the medical industry linking, right?
Right.
I mean, this for sure is going to be the first foray. I mean, how can you document all of these patients and doctors' interactions? These agreements about pre-agreements about services and all these kind of things. If you don't have something if you're using the antiquated records keeping system for one hospital or
right.
I mean, it's outrageous, right? There would be no way to implement this system without something like medical chain or MetaBlock or any of these other comparable medical records blockchain record keeping technologies being utilized, right?
Absolutely. Yeah, I mean it's how many flavors of the same solution? It's kind of interesting. I mean, everybody's really racing for traction, right? By selling their ICOs, really what they're doing, I mean, yes, they're raising money, they're raising a ton of money, a lot of these things, but what they're doing is they're creating a community, or at least they're trying to create a community of users for their product. But at a certain point, if you got people buying every medical coin that launches because they figure one of them, or one or two of them are going to be a unicorn, how loyal are they a user? And at what point does somebody just come up with something that's open and starts giving away tokens and creates an intrinsic value system that provides a solution?
How do you keep that from
and all these other things are worth nothing.
Yeah, exactly. Right. Yeah, right. That's exactly what I'm saying. Yeah.
I mean, it's like all the guys coming out going, "Oh, we're the next Bitcoin." It's like, yeah, it's been done, guys.
Yeah, exactly. It's called Bitcoin Cash, right?
Coming out. You get them for free right now. And then,
What is it?
EcoCoin, right?
Oh, Ethos?
No, EC. What is it?
Oh, ECO?
ECO, yeah.
Eco token? I think I heard of that actually.
Yeah, I sent it to John a while back. Basically, you just register and they'll give you free coins when they're trying to basically take over the entire coin market.
Right. Well, that's like ManaBase.
This is the stuff we're talking about.
ManaBase is a universal basic income concept, and the whole idea is that they're giving away the coins, and they want to create a base sustainable universal income.
Right.
They're really just trying to get everybody on their chain, so then they're the chain.
Yeah, but I mean, how many of these actually have their own blockchain? Does EagleCoin have its own blockchain? I mean, or is it on some?
Well, that's what I'm finding is a lot of these have like one mining pool, and then it's hard to tell how many miners are actually in the pool. You can just tell the hash power of the pool, but it's really controlled by the people that launch the coin. I mean, I don't know if that's the case for this one, but that's what I've been finding with a lot of the sort of obscure coins that are out there. They're basically a small mining pool, or a couple of nodes. You got the exchange that has the coin running a node or two. So yeah, what's EcoCoin's thing besides environmentally friendly?
No, this is
just the new coin.
No, there's EcoCoin or ECO, which is environmentally friendly, and then there is. It's the guy that started Uber created it.
Okay.
Which is also called Eco for Economy, not Eco as in eco-friendly.
Gotcha.
Let me see if I can find more information.
Or is it New Economy? Is it like NEM?
No, it's not. It's not NEM. I know what he's talking about.
I've been thinking about investing NEM, just because.
Well, didn't they get
Yes, a bunch of them got hacked.
Stolen. That was what got hacked in Japan on what was the?
Yeah, I forget.
I want BitThumb. BitThumb.
It might have been BitThumb.
Yeah.
Yeah. Whatever it was one of the exchanges in Japan had like $500 million worth of XEM robbed.
Yeah.
Stolen or pilfered in some way. But they have a harvesting thing, so 10,000 coins, which at this point is $2,500.
Oh wow!
And you harvest. They call it a harvesting. It's a staking thing, basically. Except you don't have to stay online to run it.
Yeah. Speaking of staking, so there is staking involved when it comes to whatever coin is being used for, the intrinsic token. Within BitClaims, right? I mean, like whatever, even if they don't end up using Bitcoin Cash, it's like that, that's going to be part of the issue. Don't you agree?
Well, sort of. Well, because we're talking like sort of insurances or something, then yeah, there's sort of like for insurance to work, you've got to have this accumulation of capital that pays out in extreme circumstances. This doesn't really necessarily address that. This is sort of assuming that that's not necessary, really, the way this is set up. It's really kind of like looking at payment adjudication, but it's not actually saying anything about serving insurance claims.
No, this isn't,
right?
This isn't insurance. So what a co-op is essentially a group of individuals comes together, pools their money, and goes and petitions a doctor to say, hey, we have this money and we want services, and we want services at a set price. Do you agree to the terms of this or not? So there's no insurance involved in a co-op, like actual.
Yeah, and this seems really, honestly, and that whole concept too, like the way they're putting that together is kind of like a little bit old, right? Like, aren't we working on like results-based benefit organizations that compensate doctors on much more dynamic metrics based on their actual performance with patients?
Well, it's.
I mean, we're exploring those things now in non-blockchain world. You would think that these blockchain folks would be on that page.
Well, and that's what I think they're trying to do here is they're trying to essentially get individuals to contribute into this pool of funds so they can then go and petition a doctor versus like an insurance company that the doctor says, I'm going to charge $500 to see a patient. And the insurance company goes, no, we'll pay you $200. And then they have to go out and collect and then essentially say, okay, well, that's unreasonable. We'll set the price at $300. So you're going to pay us $200. So we'll bill the individual for the remaining balance versus this type of insurance where they're basically saying, okay, do you agree to do business with us or not? If you do agree to it, we're setting the price for if you have to prescribe me a Z-Pack, it's $10. If I have to go get an X-ray, it's $250. Do you agree to that set price? And then any individual that needs their services, they say, okay, I need this service. The set agreed upon price was already discussed and signed into contract ahead of time. So I got this X-ray. Here's the $250 that we agreed upon.
Gotcha.
Out of
I mean, I definitely see the value in that.
But how could you do that for every single possible medical procedure?
That's
No, I
basically
don't think you can. And no, I'm not sure if you can. That and how long would the billing go back from the doctor back to the insurance companies, and how long would that take? Not really sure.
with insurance companies. There's rules regulating them like within the state, so you can't have like Blue Cross. You have one insurance company for each state, even though your insurance works in the other states. But there's different borders on that, so I don't know if there's anything like that they're gonna have to come across.
I was looking whether or not the white papers have the word HIPAA in it, and it only has HIPAA one time.
That's trying to go through all that mess is not fun. I mean, the HIPAA requirements are crazy.
Yeah.
I mean, I know,
and they're not necessarily sensical either.
And then there was I ran across an article that kind of goes into a little bit more about that, and the NIST, I think the National Cryptographic Standards or something like that. National Institute of Standards and Technology. There's 2 articles I'm reading right now, just kind of about that in the HIPAA regulations, and I wanted to know whether or not the white paper said anything about HIPAA, and it just sort of glanced over it a little bit. Nothing really too. They're not really concerned about that, apparently.
Yeah, well, because they're not doing much with the actual records with bitclaims, right? They're just handling a market transaction. So the actual records, nothing's happening there. That's another component to this too that's kind of missing, is that there's a whole value component to the, integrating blockchain with the record keeping and incentivizing healthy behavior and all kinds of potential in that this completely seems to miss. Although I guess the Buyers Club could start to establish rule sets that it is able to, maybe it has to negotiate like upfront payments to the doctors to get them to sign these deals at lower rates for the actual services. But then, you can incentivize kickbacks to the patients if they don't actually use services. But it seems like there's other components and other ways to integrate this with other aspects of building incentive and token systems that would get more value out of the implementation. Right, with records. Sorry?
Even with records, you still have to deal with HIPAA, because if you say going for an AIDS test, so that's service that you can't. That has to be strictly for that person, because you can't have anyone else find out that the person paid for it.
Right.
So it's a lot, and it deals with pretty much everything in healthcare.
Right.
I mean, even the billing process has to be HIPAA compliant.
Yeah. Well, and I mean, I think the systems can be designed to be HIPAA compliant.
I just don't.
Still
I
monetize the value of the data.
I figured in the white paper that would make it stand. So I'm like, oh, this is how we view HIPAA, and maybe how we can work with it.
Right.
I didn't see anything about that at all. And that's HIPAA's a giant, like, if you're not down with HIPAA, then I don't know.
Yeah.
Don't know if I can work
Again,
with
the fact that they're putting Bitcoin Cash on here just seems like a ploy to just raise the value of Bitcoin Cash.
Well,
no offense to good web designers.
It's kind of a placeholder for now until they move forward, or are they locking into it?
That's a good question.
I couldn't hear him. What did he say?
Oh, it said it was a placeholder, or are they really locked into it?
I mean, absolutely. Now, here's information I can share with you. They just got a contract, partnership, he said, with ARC. So.
Oh, ARC, the platform.
That's right.
ARK?
ARK, that's correct. And so ARC's main objective is interoperability, right? That they know that there's so many different blockchains out there that they want a platform that allows interoperability between any blockchain, right? So point-click blockchain, that's their entire motto. So presumably, okay, if this isn't a ploy for, Bitcoin Cash, like you're saying, presumably this partnership with ARC is the result of Bitcoin Cash being some sort of placeholder in the original model that had to do with something about the high. I mean, they might have created this model like pre-Lightning Network, pre-SegWit, like it might have been like $30 or something to transfer Bitcoin, and so. Maybe Bitcoin Cash was a placeholder at the time. Okay.
Yeah. I mean, that's in the model that's described here. That's how it appears, is that it's just there. Like, they're not like raw Bitcoin Cash. They're just, here's, this is done with Bitcoin Cash. So, and again, like, I could see someone proposing this to Dash, or they may even be implementing something like this in the Dash network to just run on Dash. And Steemit has their own smart, contract layer. I can see them, this is a pretty straightforward idea. It's not like they're inventing the whole concept, right?
They only own this domain for a year, by the way, which if they cared at all about SEO, that's a huge no-no right there.
I mean, a lot of these domains are very new in the space,
Yeah, but
I mean, a lot of these things really only
if you're going to commit to.
Yeah. Oh, you're saying they only own it if they've only paid for a year?
This domain expires in a year.
Gotcha. Yeah. Oh, and so it's new too. Like it was just put up.
Let's see. Yeah. Creation date was January 30th, 2018.
Yeah.
What's their host?
Namecheap.
Oh,
not a good signal as well.
And their Twitter just joined on February 2018, and they have no followers, no tweets.
Well, okay. Just to be fair, hold on. I am totally sort of in the same position. I mean, the Braintrust is relatively new, and I just created my Twitter and Facebook, so I have nothing there. I'm trying to get a social media guy to handle that kind of shit. So, they might be in a slightly more advanced stage of a specific product that they want to release. Okay, so you can't fault them for not being super established yet, right? I mean, this is a relatively new space, wouldn't you agree?
Mm-hmm. Yeah, I would.
And I don't know when my thing expires, but I mean, presumably it expires in a year, and then it'll just renew automatically. And I have mine done through Google, so, you know, I feel you on that. I feel you on that. I mean, but some of the ones that were created a long time ago, arguably, like these people just bought them from someone else, right? Like from a domain name broker or something like that. So like block.com with the Q, like, and they're one of like the title sponsors at Consensus. You know, their website, like that domain name was created like, I don't know, 2008 or something, 2010, right? A long time ago. And then they just like re-registered in like, I don't know, like last year or something. So clearly
I only brought that up for SEO purposes. If it's like, if they had anyone who cared about like search rankings, how long you own your domain definitely factors into Google's algorithm. So it's just like, it kind of shows just, you know, just how long somebody's been involved or how long they plan to be involved in a project.
Okay. So
that was it.
And for the low cost to register it out longer years, you're saying most people that are thinking about that would just pay for like 5 years or more to have the better rankings?
Yeah, so like my day job, I own the domain for the next 12 years or whatever the maximum I'm allowed to buy is, because that's, you know, they when your search engines look at your website, they, you know, you don't look like a spammer.
Yep, absolutely.
Can you help me do that? Because I need that for,
yeah,
you know.
I can help you with all. I can help you with anything, man.
Yeah, man. Because I just registered through Google, and it's just, you know, I think it's like register for 1 year and then, you know, auto, you know, renew is on. That's all I know. So let's review. Okay, like what do you guys think the vision of BitClaims is?
To create a pool and a single payer system for fans of a particular currency.
for one specific currency, right? So their ideal vision is one currency that is universal for this platform.
Well, but so that's the interesting thing here, is that the idea of it being this network where you're going to negotiate that people get paid based out of a pool, it does make it kind of hard if you're going to have like a bunch of different currencies in there. So they're kind of setting up like people are going to convert to Bitcoin Cash in order to join the pools, or they're going to make different pools for different currency holders, or they're going to somehow bridge the gap that says, well, you can actually throw any coin in this pool. We'll assess it at market value and then negotiate based on our projections of how market value is going to work.
Well, I think for simplicity purposes, that's why they're trying to peg themselves to one particular coin in general that is readily available.
Right. But I guess my point is that if you're negotiating contracts with doctors for future services and your central pool of funding is based on a speculative asset, that opens up a lot of possibility for basically 90 days later, this thing's defunct.
Well, that's, I mean, the real issue that it comes down to is because you're trying to negotiate a price for services on today's date, whereas that same MRI, say, I don't know, in the summer when it's high, that $250 MRI could end up costing you $1,200.
Right.
And then come the correction at year end, that same $250 MRI costs you $30.
Right.
Who the hell knows?
So now, unless they underpin the contracts and write all the contracts in Bitcoin Cash, right? And that's going to be a hard negotiation of the doctors to try to get doctors to go, oh yeah, I'll accept Bitcoin Cash at whatever it's worth for, you know, 0.1 Bitcoin Cash for this procedure and 0.02 Bitcoin Cash for that procedure. I think that's a tough sell too.
Yes, and you're not going to get the old guard to get on board with this, and you're going to get a lot of pushback from the multi-trillion-dollar insurance agencies.
Yeah, and you're not going to have the backing of the multi-billion-dollar Bitcoin world.
Right, exactly.
The people that are going to be interested in using it are mainly younger, less health problems. Yeah,
Sure.
you're not going to get the older people that are going to the doctor all the time that are saying, "Oh yeah, Bitcoin Cash. I use that all the time."
Right.
Cash.
Yeah, but even that, like, I mean, I would say this makes great sense if I use a stable coin, you know, any kind of stable coin, it could make sense. And then if you tie that stable coin to some kind of like medical health benefit incentives, like getting people to quit smoking cigarettes and stuff, there'd be huge potential there. I think there's a disconnect to the value circuit in what they're offering here. They're basically just going, yeah, here's a thing you can do with blockchain, and oh, let's plug in Bitcoin Cash, and now we've got a full offering. Maybe some people will invest their Bitcoin Cash in our idea.
Pretty much.
Yeah, and there's nothing to say that somebody can't come along and just say, let's tie this to, to be honest, I'm kind of out of touch with a lot of what's going on in the coin world, but some other popular currency of the time,
right?
Like whatever, Ether. I'm going to create this same model, but I'm going to peg myself to Ether.
That's what I'm
saying. Yeah.
You know, you could easily do it very easily with Ether. You know, like Ether could be token. But I guess you could just use ERC20 to model however the interaction is going to be with the doctors and the price point in advance. Like MRI gets done, one reading this price. You know what I mean? Like, so.
Yeah, so I guess the real question is like, what is the real strategy, or is it simply lack of for them to have it proposed this way?
I mean, let me lay out the 4 questions in order then, because I was trying to hit one question at a time here, but in summary, okay. So, but the 4 questions are like, what do we think? What is their vision, right? We got a group of people, smart people on here, right? Like they're trying to sell this to the outside world, right? We're on the inside here. Can we figure it out? So when I present it to them, it should be close to what they have, and then we can work from there. Like, why did my group not come up with the same vision as you, right? So what's wrong? Because marketing is also key, right? Let's not undervalue marketing as far as anything being adapted, right? I mean, so the 4 questions I really want to hit here are, what is their vision? What would be the ideal trajectory of the implementation of that vision? Okay, what are the biggest obstacles standing in the way of that vision? And then, what is missing from this model?
I mean,
do we know what their vision is? It's
like
a single payment system with an agnostic. I mean, okay, so
it seems like the vision is a single payer system, and from the white paper, I think that's safe to say. Let's see. In conclusion, yeah, they're basically advocating a single payer system.
And by single payer, you mean like one currency?
No, I mean a single payer system is when you have basically one negotiator going to the providers saying, we're the ones all your money's coming from, and you're going to take it or leave it.
But in this case,
but that only works on a nation
contract, right?
Right, but that's
so we are talking about a coin, like a platform, like however you want to describe it. I mean,
Well, all they've really done is they've designed a smart contract and plugged some Bitcoin Cash into it.
Mm-hmm.
They've designed a set of smart contracts and plugged some Bitcoin Cash into it. So what I'm saying is they haven't closed the value circuit. All they've done is taken blockchain and used it for money. They can use Bitcoin Cash, they can use dollars in there. There's nothing unique and significant about what they're doing as it pertains to blockchain and as it pertains to token economics.
Okay.
They may get investment, but the real question is, what are they going to do with it? I mean, the other thing is, all this is fine and good. This is their first stab at a white paper, fine. Who are they, and what are they going to do if they raise $5 or $10 million or $30 million? What are they going to do with it? And I don't know. I don't recognize any of the names on this.
Yeah, I don't either.
But we'd have to really dig into them and find out like what it is that they think that they're bringing to the table that's somehow going to change the game here. But the fact that they only use the term HIPAA once, talking about a medical solution, then they got a 14-page white paper. And I'm talking to our state legislator and 4 different attorneys about captive insurance and companies in captive insurance already active doing business, working on implementing blockchain solutions, I would expect to see some real citation of that kind of background and experience in the white paper when there's a team of what, 11, 12, 15 different people here. Yeah, I don't see anything about like captive insurance or even like organized negotiation. Like I would think representative negotiations.
Well, did you see the one guy's title right there? Scroll back down to the advisors.
Andrew
Stone's
Bitcoin Cash
title.
Core developer. Yeah, Bitcoin Cash Core developer.
Yeah, so that peg to Bitcoin Cash isn't going to change.
Right, and Bitcoin Unlimited founding member.
Yep, same thing.
Yeah, that's Bitcoin Cash also.
Yep.
So there's some interesting things. There's some vested interest there. The more and more I hear about Bitcoin Cash, the more I kind of get a sense that it's really kind of an attack on Bitcoin.
Mm-hmm. It's Roger Ver, right? And
yeah, and I listen. I've done them the courtesy of listening to some of the things that they're talking about, and they're not saying anything. They're really not. He's like hyping on about Lightning Network being too experimental. If they want to make an experiment, have at it, but we don't think you should experiment with this thing, and it should be cash. And they're just like, they're trying to. It's like, get rid of your rock hatchet and let's upgrade to a steel sword. Bitcoin's an amazing technology, but it's not as simple as just cash, right? I mean, it really has a little bit more complexity and capability of that, and the whole purpose is for it to do what money does: facilitate the coincidence of wants and needs. And it appears to be that Bitcoin is still on the path of doing that. So I don't really see what Bitcoin Cash is accomplishing, nor do I see what a lot of these coins out there are accomplishing, besides keeping the market competitive. There's value in that for sure.
I mean,
he's also the first to address scale too, and that's going to be huge. I mean, they're so many years ahead of every other coin that also has a scaling problem, because they all do. But the only solution is.
But Bitcoin has a scaling problem because it's actually being used. The same way Ethereum has a scaling problem because it's actually being used. All these other coins out there claiming that they're solving some problem. It's like half the time they're claiming they're solving a problem that doesn't actually exist. And the other half the time they're claiming they're solving a problem that they have no clue how to solve because they don't actually have the challenge.
Or that they might have one day, but they don't because nobody's using it.
Right. Exactly.
So that's kind of my whole thoughts on was it Ripple?
Yeah.
Because I work in the financial institution, so I can certainly see value in the transactional base being kind of on the blockchain.
Yeah.
But like,
did you read that recent article by one of the original co-founders of Ripple that's not with them anymore?
I did not.
Yeah, he let me see if I can find it. He basically was talking about how, it's they're not supporting, decentralized systems are the only solution basically, and he was alluding to Ripple's not very decentralized.
Right. You can't even mine it.
Yeah, like it's not decentralized at all. It's just the banker's Bitcoin. That's literally what it is.
I like that. The banker's Bitcoin.
Yeah, it's a bunch of bankers started a company, made their own coin, held on to 60% of it, told a bunch of their buddies to buy it. They manipulate the market. You see it go 15x in terms of Bitcoin and then drop, 90%. It's totally managed and manipulated by a handful of bankers.
It's soulless.
Yeah, exactly. Let's see if I can find this. Of course, I'm not going to find it.
The CEO of BitClaim's LinkedIn page, because it's right on their site. And it's a small thing, but he doesn't list BitClaims at all. And he is also the CEO of blockbiz.net, which is a fairly shitty website.
Oh no.
Yeah.
So yeah,
So
here's
yeah,
I got Stellar.
yeah, yeah. So here we go. This guy, Jed McCaleb, co-founder of Ripple and Stellar, creator of infamous Mt. Gox exchange. Blockchain should remain decentralized in order to succeed in the future. There's an educational curve happening here, right? And so as we evaluate these ICOs and all these projects, and as people start to figure out what a value circuit is, what money is, there's a learning curve that we see illustrated with the market, and that's why Brendan's price predictions, though as awesome as they are, aren't quite accurate, because the market is insane and he's got some logic behind it, his numbers.
Yeah.
But the market's learning, right? The market is going through this learning curve of understanding what is centralized versus decentralized. What's a token versus a coin? What does it mean to mine something versus issue it? It's a wild ride we're on here.
Right. I totally agree, and then to be able to figure out like the proper utilization of all of those aspects of this technology is also one of the main challenges, right?
Yeah.
And I think it really is going to start with like regulation, which is why, what you're doing at the State House is like so important, because, no one is going to mass adopt anything that doesn't have some sort of like government issuance of regulation or security behind it. You know what I mean? Like, it doesn't have to be the fact that they are issuing it themselves, but the fact that they say like, okay, like we will allow like credit cards to transact in Bitcoin. You know what I mean? Or we will allow you to buy and sell like mortgages using Bitcoin, right? So it's like,
Right.
as just like the financial institutions, figure out, how to, classify this, and the governments figure out how to regulate this, that will eventually lead to, the ability to, adopt this properly, like across all these different channels, right?
Yeah. Well, so check this out. So another little tidbit that came up today was a conversation about virtual municipalities.
On
and it's actually, well, so it's actually something, there's some things that Vermont's done outside of blockchain in legislation that have actually opened up some doors. So they've got some digital corporation laws that they passed a little while back. And they've also got this municipal infrastructure entity that they used for fiber outlay, where basically different towns could, residents of different towns could join this initiative, and the various towns could join as sort of a cross-municipal service provider. And so we're thinking that if we can pass this blockchain-based entity legislation, then we can cross those two things and do a blockchain-based municipality across the state and use that as a basis for really anything that's engaging directly with the citizenry. So voting, polling, service provision for basic needs, census data, paying taxes, opening bank accounts, all that kind of stuff.
Right.
So
you bring up a very interesting point just from the virtual municipality standpoint with like municipal bonds that states issue. The fact that you can actually turn that into some type of digital transaction is interesting.
Yeah, well, we're also looking at it as there's some areas of, identity protection and areas of investment where, we might be able to open it up and sell those municipal bonds to foreign investors while still protecting our local constituents and their, their say, their claim on the processes.
Absolutely.
Yeah.
And a bond like that, in fact, like if you had a financial structure like that behind, a tokenized like medical system like this, then that could be like the security. Because the thing that's lacking is like the security of a stable coin, but it's like the security of knowing you are going to get your money's worth, right?
Right.
Like I'm getting my service, like, and then doctors like, am I going to actually get paid? And I mean, that's the main fear, right? The whole selling point is, it takes doctors so long to get paid. Right. And so if there was like a bond issued by like a virtual municipality where the doctor is governing, because we also already talked about the fact that, you know, there's
Well,
so
so here's an idea, right? So you just said it. You just said it right there. A bond, right? So you take their idea and now forget the currency, right? Make it currency agnostic. I go to the doctor, they're part of the network. When the doctor gets paid, that payment triggers a bond issuance to the market, right? And so the purchasing of those bonds pays the doctor bill. And now the holders of those bonds get paid back as the value of that doctor's service fluctuates, or as the value of the currency fluctuates. So there can be other demands in the market that actually
so you're saying
pay back that bond.
The bond would be like held, you know what I mean? Like almost in escrow. So the doctor would withdraw his money's worth from that. They would like sell that, but you're holding on to the remainder with the idea that no one can sell this for 10 years or something, right?
Well, so what it is, the bond actually sits there static, but it's relative to the market. So there's not necessarily a time commitment to this bond. This bond just paid that doctor bill. But now when like the tourist season comes around and the tourists are coming into the area and they're doing business, and for them to spend money, their transactions transact into the local currency, the demand for that local currency basically goes up, right? So to keep the value of that currency stable, it doesn't give those tourists more value for their coin. It pays bondholders for the increased value in the market on the coin. So every penny that it flips up, that pays out the bondholders to bring that penny back down on the market. And so you can have, I mean, this is really monetary theory, right? This is really just monetary sovereignty and saying, hey, our service providers and our demand and our community is what's going to create the value. And so we're going to have faith that our community is going to continue creating value. So we'll pay, we have people in the community willing to buy these bonds to pay these medical bills because we know that the community continues to create value and people keep coming back and pumping value into the system. And as long as that's true, those bonds get paid. They don't, they get held at a certain point. But the reality is that the holding of those bonds actually protects the spending power of the money, because while they're in the form of bonds, they can't spend them. And so that's where there's no time guarantee, but there could be an extension of that, holding period if there's a slowdown in the economy's value production.
And not to change topics, but you touched on an interesting point of why not just straight monetize an individual's doctor's practice, and the better service they provide, the better value of the practice.
Yeah. I mean, I think that's really hard to measure, right? And so it's a great idea, but I think like a hairdresser is it's more applicable to say, oh, the better the hairdresser, the better they get paid. To measure a doctor's actual effectiveness is really challenging and takes quite a bit of time, right? So you don't really know it in the long run. So the way that we pay doctors and figure out how to compensate them, I think requires a good amount of analysis.
Well,
and
there's an issue with that, though, just to step in, because it's like there is a metric that's used to qualify doctors, you know what I mean? But it has to do with like patient survival rates and things like that. But there's a seedy underbelly to this process where it's like many doctors will assess the patient and then they'll just say, oh, I can't help you. You know what I mean? And because they know that patient's survival rate is so low, it's gonna it's gonna be like, oh, get a pinch hitter in there so you don't mess up your batting record.
Right. And so this is where like some of these concepts of like writing out these metrics where like that patient is actually worth more to the doctor, right? Because patient requires a higher level of service, has a higher level of risk associated. And so coming up with reasonable metrics that actually weight stuff like what you just described is the key. And that's what blockchain hopefully can provide.
For sure. And it's also about like, it's creating the value system is also about this trust, right? This interlinked trust. And so one of the ways that you would create trust within that network is to you know, you utilize the fact that the doctors themselves are, yeah, okay, so every interaction is logged on the blockchain, right? So in the same way that
like a turn away would be weighted along with the death.
Right, but it's so the fact that like the seedy underbelly of this exists because it's like a doctor can assess you, and it's just like that record gets lost, and it has no impact on him because he decided not to continue treatment, right? You know what I mean?
Right, because he knows the only details they look at are the metric that we know,
exactly. But
and
by
he
integrating
understands how to manipulate the other people.
Yeah, it's like how Uber drivers or Lyft drivers ratings, it goes down based on their cancellations, right? You know what I mean? As long as you cancel, you can't cancel, right? You know what I mean? Just wait and wait and wait. You know what I mean? Because the more cancellations you have, the lower your rating goes, right? And so the fact that every interaction will be logged, like, you know, the next logical step for anyone that has, you know, like the results of the test are going to be there, everything's going to be there. So it's like the doctor is naturally going to have an incentive. Like you better treat this patient because they're going to know it's going to affect your record. You know what I mean?
Right.
It's already there. You know what I mean?
Right.
Yeah.
That's the issue right there is if you go to the doctor and say, well, you know how to treat everyone or your record's going to go down, what's his incentive for actually using this?
Because if he turns them down, that's also going to reduce how much he can get paid, right? How much he's worth.
Now he's saying, why would a doctor use the system at all?
Goes into this program. If he stays with the status quo, he's getting paid just fine.
Well, this is where the education comes in, right? There's more patients than doctors, and sure, the patients that are willing to pay more, maybe willing to operate in the old system, possibly. The reality is, like, the majority of people can't pay for doctors typically, right? Even if you've got the money, it's not necessarily easy to like pull the money out of this place to go, you know, pay the bill right away. You know, there's an issue there. And so to a certain extent, I don't really care what the doctors think. They went to school to heal me, and that's their job. And they actually took an oath to make people better. So it's up to us to decide what kind of system works best for us and demand that the doctors use it to serve their practice.
Well, that brings up an interesting question there. So who's their first target? Like, should they target the patients first? Should they target the doctors first? Should they target insurance companies? Essentially, their model eliminates the need for an insurance company. So,
right.
I mean, you know, that's like Tesla trying to get sponsorship from Exxon.
I mean, that's the thing too, is like their business model basically just makes a bunch of enemies. I mean, you're making an enemy of the insurance companies because you're eliminating them from the picture. You're making an enemy of the doctors because you're coordinating all your customers to negotiate a better price. And ultimately, you're also fighting the whole learning curve barrier of like, oh, what's this Bitcoin Cash thing, all that. Really, I mean, they're you know, their concept is really simple, and it's so simple. It's really just not. I mean, it's not new. It's not crypto. There's nothing special about it. The reality is that like we need a little more creativity to actually offer something, because it's a great idea that sure people should buy into, but okay, who's going to buy into that? The people that have money for it, right? Like all they're doing is serving people that already have money to put their Bitcoin Cash or their whatever coin into an insurance pool. That doesn't solve the problem of like what 70% of the other people in the world that don't actually have coverage and can't get care from doctors. In fact, all that actually does is further incentivize these closed circuits of the best doctors giving care to the people that can pay the best, and cuts out all the rest of the people with the problem.
Right.
Well, yeah, and you have the concept of adverse selection, because all it takes is one 75-year-old on his deathbed to bankrupt the whole thing.
Right. Yeah. So yeah, I don't see a solution. I don't see them actually. I don't know what they're selling. That like, it's a great idea. It's not new. It's not crypto. It's an idea that like some guy in Vermont had in Burlington in 2003. It's not innovative in any way.
Yeah, you need to. I mean, you're going to need to have, before you can even go to a doctor or go anywhere, you need to have a few 100,000 people that are in this pool to really have any sort of negotiating power.
Right.
I mean, right now you have Bezos, Buffett, and the CEO of J.P. Morgan, Jamie Dimon.
Yeah, yeah.
They're creating their own healthcare, basically a nonprofit healthcare company.
Yep.
To try to take this market because they have 1.4 million employees that they're going to cover through their own insurance plan.
That's what I'm saying.
I mean, and they have the amount of people to do the negotiation. If you have
Right. And that's captive insurance.
No doctor is going to be. They're going to be like, oh, whatever. 10,000 people throughout the U.S. I don't care.
So that's what I'm saying. So captive insurance isn't a new thing, and it's actually Vermont happens to be the leader in it. And so like if these guys, it's basically what they've described, that they haven't used the term or verbiage of captive insurance once, and I don't see anything related to that. And I didn't dig into the backgrounds, but just in the titles and stuff, I don't see anything really relative to that kind of background. So they seem completely painfully unaware of the fact that there's progress on this style of business, to the tune of, this JP Morgan, what you just described, that's a captive insurance consortium. That's exactly what they're doing. Yep. It's not blockchain or Bitcoin necessarily. It could be. It would make sense for them to implement at least blockchain, but there's definitely a lot of momentum in that field, and it doesn't appear that BitClaims has really even a hook on that train.
It almost seems like this is kind of put together with enough information to bring on investors and people and go nowhere.
Yeah. Yeah, that's kind of my sense.
We tried, sorry.
Yeah, or pivot, maybe they, have some kind of app they trying to do and sell a bunch of data.
Yeah, that's even worse.
Yeah. Yeah, I don't know. I mean, honestly, I wouldn't pursue too much with them. I would look for a better team working on this type of project.
Oh, absolutely.
And definitely find something that's looking more at token economics and really applying that concept.
For sure. I mean, for me, it's more along the lines of, I was trying to bring a short sheet of, like suggestions, comments, right? Like the type of things a think tank would produce, right?
Mm-hmm.
In reference just to this company, and have this as a trial run of like kind of how do we create value for the Braintrust?
Well, yeah, and I think this is a great trial run for that, because we don't need to make a lot of commitment. And I could tell you, I've sat down with a lot of VCs in the past year, and this is what they do, man. They look at something, and in 5 minutes they tear it down, and if they take the time to read a white paper, they usually tear it right apart.
But that's what I'm saying. This is the value of the Braintrust. It's like, if we have meetings like this, and like this itself is very valuable information.
Absolutely, yeah. All I'm saying too, though, is that those VCs don't spend a whole lot of time following up with the ones they really tear apart.
Absolutely. No, absolutely not. But I'm just saying, like this format of what we're doing, I think would be a very good way of creating a value structure for the Braintrust, and something where we can market ourselves as a profitable entity per se. You know what I mean? Like
absolutely. Absolutely. Yeah. Well, and there's definitely a lot of stuff going on that's worth evaluating, and I think this would be great to keep having conversations. And we could find these things and tear them apart. Sometimes we find some good stuff, and there's definitely some diamonds in the rough. But I think it's really important to honestly dig through these things and tear them apart, because it's unfortunate just how much how many big decisions people make with very little information, and a lot of sort of FOMO out there in the market. And I think it's really important for people to just constantly keep sort of hearing these things from different angles, right? And that's what's done it for me, is over the years of sort of researching these different cryptocurrencies and what the ins and outs of them were. And then suddenly seeing the tokens go crazy and seeing all these white papers, and now I'm inundated with white papers. But I still try to read through them because every time you break down the implementation and see, you know, these different use cases from different angles, it gives you a better sense of, you know, what token economics is,
Yep.
you know, what this really is capable of.
Yep. Different possible applications, and you know why those applications may or may not succeed initially, and you know just give a general structure of, you know, how to operate in this newly evolving spectrum of, you know, blockchain theory, right?
Yeah, absolutely. So, hey, I wanted to, have you guys, anybody paid attention to Propy?
Absolutely.
Yeah, they
Yeah.
updated the
Like
website.
a couple other members of the Brain Trust were talking to me about that.
Right on. Yeah. So they did this real estate transaction in South Burlington, Vermont. I actually talked to the title clerk that did it, and it's great because the only reason I wanted to bring this up is just to make this point. She's got no clue what she just did. You know, I mean, she knows. You know, she's been explained, you know, a number of different ways. You know how this stuff's working and stuff. She really just did her job, right? And then she sent the document off, you know, to somebody else, and then she got it back, and she had this extra component to the document that has the hash on it and the reference to the blockchain. But what was great is that she's all of a sudden like getting invited to go talk all over the place, and she's probably not going to go, but like she's getting invited to speak all these different places because of her involvement, and yet she has no real understanding of what it is she's involved with. You know, I doubt she owes any Bitcoin or, you know, anything about that. But it was just kind of refreshing to see, you know, she kind of gets, you know, some of the benefits that have been explained to her. But it's just, you know, as far as a user is concerned, it's just another way to enhance the service she's providing to her, you know, to her residents in securing their titles. And
yeah,
so
I want to look more into them because I've definitely heard about Propy. You know what I mean? Like a couple of other Brain Trust members were like just mentioned it to me the other day, and then I come across news about them maybe a month or two ago.
yeah.
You know.
Yeah, and there's another one I haven't caught the name of yet, but that are doing like similar to Propy, but doing I believe rental agreements.
Are you talking about like B token? Do you know B token?
I've heard of that. Yeah, I haven't looked into them again recently, but yeah, they're like an Airbnb style.
Basically, I mean, it's like think about what Airbnb. Again, back to the whole thing. It's all about transactions, right?
Yep.
We're just decentralizing transactions, and so what is Airbnb the intermediary for? The transaction of you allowing someone else to be in your home and the payment of that, right? It's like if you tokenize the value of your house, and then the person staying there buys those tokens, like, you know, they are literally paying you in the token of your house to stay there, and their incentive not to mess the house up is the fact that, you know, like they actually own a piece of the house while they're staying there, right?
Right. Yeah, that's interesting. Huh.
You don't want to make the value of the house go down, right? Like,
Right.
you own a piece of that, your tokens will go down, you know what I mean? Like,
Yeah, absolutely. Yeah, and you can have like a whole. I mean, with some of the complexity in the ERC tokens, you could have, you know, a whole set of sort of contract parameters built into that for, you know, confirming that it was cleaned and left in good condition, and, you know, that it was clean when you showed up and all that kind of stuff.
yeah, man.
There's one other one I was going to try to look up, but I don't know if they have a website up actually yet. But it's Trace, which is a supply chain solution. And yeah, I don't think they have anything live yet, but I'll keep you posted on them. But yeah, I guess you know, I'm really looking for people that are actually building stuff and really make things happen, because Vermont's ready to go at this point. I think there's enough awareness and willingness to sort of push the envelope that you know, whether, you know, I hope this bill goes and I hope that it opens the door, but even if this bill doesn't go through, I think that people are ready enough to go because of the legal acknowledgement legislation that passed. So it was, blockchain basically being admissible in court, which basically means that any smart contract is a legal contract by the law. So yeah, so I want to launch as much as I can and get people to domicile their blockchain projects here in Vermont.
Definitely. Well, I think we should start having more meetings like this. We got to organize, more of a structure of, like where we're trying to go, and
for sure.
Yeah.
Yeah, we let this one run pretty long, but this was the first Braintrust Interchain Live meeting. So
yeah.
So this is good. Yeah, let's definitely do this again. We'll find another few sets of targets that we can rip apart and keep it going.
Yeah, Brandon, were you gonna say something?
Yeah. Well, no, I was this one right here. This, what's it called? I think I've already mentioned this. Folk token.
What is it?
This is more of like a hilarious segment, but fuck token.
Yeah,
I know
about fuck token.
Finally usable crypto karma.
Oh yeah, and you can burn it if you just don't want to give a fuck.
Exactly. That's just, I don't know. I look at that and I just laugh, honestly. But I was looking through their what's it called? Their HTML code on the site, and they do have a roadmap, and I enabled it, but I mean it's not linking to anything, but they apparently do have plans to release a roadmap here pretty soon, because they wouldn't put it on there if anything.
Have you seen Trollcoin?
Trollcoin?
No.
Check out Trollcoin, bro.
Yeah.
I think the call sign is like TROLL.
Nice. Yeah, have you guys noticed there's a bunch of delistings on Bittrex?
Yeah, man.
Yeah.
Oh, did you notice that Binance is moving to Malta?
Yeah, they've moved a few times, haven't they?
No, Binance has always been in Hong Kong.
Well, they just moved to Japan, didn't they?
No, Binance never moved to Japan.
They were just doing business in Japan. There was just an issue with Binance in Japan.
Well, I'm not sure what the issue was, but Binance operates everywhere, but their headquarters is in Hong Kong. You know what I mean? And so they initially had pushback from the Chinese government, but they were able to, so they banned all Chinese users, right? But everyone else from everywhere else in the world is allowed to use it. I think they're basically scared about Xi Jinping becoming president for life and what's going to happen. So they moved to, Malta, which is like this basically safe haven, I guess, for this. They're inviting it, right? So the largest crypto exchange by volume, right? Coming to this very small country off the African coast between Italy and Syria, basically, Algeria. So, it'll be good for Malta. And it's interesting because Binance now, it always had its own token. Now it has its own blockchain. And it basically is going to control the country of Malta, right?
Right. So isn't Malta launching their own currency too? Is that one of the islands?
Maybe.
Well, anyway, here, I'm going to disconnect here.